All right, ladies and gentlemen, I hope you had a wonderful day. I know the title says we're going to all-time highs, but we already got there today. The cool CPI got everybody excited once again. And if you don't realize, I mean, not only is the SPY ETF almost at 600, but if you go look at the SPX, man, this is about 300 points in about 10 trading days. So it is absolutely wild, but we got the data out of the way. Volume and liquidity is still a little weird, but now we move forward. Not much data, a couple of Fed speakers, but I mean, this is setting up hot stock summer. No, does anybody say that anymore? Well, either way, Chad, we got a lot to talk about. I got the plays. I have the recap. I have a great lesson for you and some awesome questions from the chat. So I hope you're locked and loaded for all of it. What I need from you, a thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/thestockmarket. We will see you there in the morning, baby. Run it.
Working to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, do me feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
All right, off the bat, as far as what happened today, I mean, it's one thing about the data, but you could see it right when the data came out. We had a pop. It was about 0.4, 0.5. Then the Russell shot up by like 1.5, and then you gave up a little bit of it at open. The Russell came down gold, and then we absolutely took off and continued, and it was all throughout the data. We had Fed Speaker Kashkari. It didn't really move much, but by the end of it, we ended up moving almost double, 2 standard deviations what was priced in. So it's pretty simple. The CPI came in line, aka cool, or cool, aka in line, depending on how you want to look at it. But the thing that got everybody excited was that this was your first inline inflation print of the entire year. We're in May. This CPI was for April, but January, February, March, all of them came in hotter than expected, and that's after the last 2 months, everybody was getting optimistic towards those rate cuts. So people got a good reaction today. There was also retail sales, and that came in lower. It cooled down after heating up last quarter, and that bad news, good news theme came into play, and that also helped out some of the movements that we got. But quite simply, what we had here today, and now looking at the calendar and everything else, this just bought you another month of time until Powell or the next set of big data. But even if we get pricing data, people are going to look back to this CPI. Maybe the non-farms moves us, but it's pretty much buying you up until Powell. And you also got a new all-time high out of it. And now we got to figure out where we're going to settle. Remember, every other level, we're moving up 100, 200 points at a time till we hit 53.60, and then we chilled out for almost 2 months. So we got to see where that's going to lead in now, if it's going to keep rocketing up, or does this summer calmness kind of cool us down. But it was very simple. That was your first key. Moving into the second key now, this has to do with the liquidity, and we've been bringing this up. The volume today was both high and low, and why I say that, because on single stock names, Goldman Sachs says the volume was 45% higher than the 20-day average of volume. But then you go look at the S&P 500, the SPY volume, that is still low as it has been even from last week, and we had a CPI today. Usually CPI days bring in a lot of volume, and that's why I was saying even last week, we got to watch out for this. And sadly, you still have that volume coming down, and there are shadows of that illiquidity. So that's the only thing I'll throw in today. Otherwise, we'll see how the next couple of days play out, because like I'm saying, doesn't mean that something's absolutely wrong, but this low liquidity and the moves it's causing, it's definitely something we might have to start paying attention to, especially if commodities are still ripping and gold and all of these things in the background, other currencies all around the world. In central bank actions, we're getting a lot of it. So keep your eyes out for that. That is key number 2. And then finally, like I already said earlier, man, unfortunately, the calendar is going to dry up from here. We do not have any big data coming out here. It'll be a couple of weeks till you get some of the bigger sets. We do have NVDA earnings next week, and we'll see if that opens up one of those pockets of liquidity. But this is where I'm saying for today. I know when I say it's simple, some people are like, what do you mean it's simple? Why is the market up and none of this data makes any sense? Believe me, I understand, and I hope you understand that we are following a path and not the data. That whole no landing thing, that is still a path. That's why Powell and all these Fed people, they will talk about the data. They'll talk about the short-term stuff, but the things the markets are pinned to, the bonds, the Fed futures, and what they are communicating, it is this broader plan that they have engineered to kind of allow time, and that's why the market is now moving in lockstep with the Fed instead of trying to fight this path until we find out if that path is actually a dead end or not. So that's the next big part about this, because seasonality, you know, it is May. We're almost done with that. Before you know it, man, you're entering into this second quarter, you know, first half and then now second half. It's almost June. You will start getting other seasonal effects on both the market as well as the data. So we got to find out how that plays out, but maybe even then, just be on the lookout for some shifts, especially as we move into the summer and the SCP. But all in all, it was a very exciting day. It didn't give us the volume we were looking for. It may be a little bit more of a confusing path, or maybe it's only confusing because you got to be patient, but it's giving us our work, and now we'll see where the next weeks take us, and if anything, from GameStop to anything else could surprise us. But now, let us get into the plays. So, right off the bat, I got a couple of different plays, and the first one, it's a play that I made today. I made a small option, and I did good on it, but I am going to keep my eyes out this. Maybe we go for shares or something. The only problem about it is that it is high, but Netflix, they had a lot of news today. They were talking about NFL Christmas. They're going to be having a live game on Netflix this Christmas or next Christmas, one or the other, and then they talked about their ad platform, saying they're going to make their own ad platform and that they have 40 million people already on the ad service. So that was big news for them, and there's just all of these news drops. So maybe we get more if that's kind of the vibe they're on, maybe some upgrades or downgrades. But now go look at Netflix's chart, man. This thing has came back up to earnings. I think there's a couple of names like Netflix and Meta where they were already elevated. They kind of had a little drop, but it's worked its way back up there. So you're like, yeah, SPY's at all-time highs. There's still names that are trading lower, but some of these big dogs, I mean, they have came right back up, so right back to earnings level, and they're getting all this news. I would be on the lookout for upgrades, and you saw what an upgrade did to Dell today. That was absolutely amazing, and all the chips super duper led today. But that is play number one. Play number two now, this is related to the Netflix one, and I think this is interesting. I don't have a play on this, but MGNI, and I'm only bringing this up because the small caps lately, with all of this meme GameStop hype, it's been going crazy. And now with that Netflix news, they are a Sympathy, Magnite. They offer some of these ad serving platforms like TTD. That was another Sympathy that went crazy after this news. So they got to pop smaller cap, and they're dealing with this. Maybe it does good, but I have this line here. This isn't just for Magnite. This is for everything. I forgot who it was who said it today, but it made me LOL. But pretty much Wall Street right now is saying that Wall Street is better covered for the short squeeze. They're saying that Wall Street learned from last time. They're not as heavily short, and this time around, since the shorts on some of these stocks wasn't as high, they are way quicker to cover. So I don't know, you believe it or not, we'll see, because today it did bring down some of that GME hype, but then kind of showed some life there at the end. But it was just day number one of coming down after 3 days of going crazy. So we'll find out, but that is play number two. And then finally, play number three, baby, Marvel. And like I just said earlier, the chips were leading heavy today, and Marvel is pinned. So I'm expecting a random pop at any point, especially upgrades or if we get more hype. But you could see anytime it's had these like drops and pops and then it gets pinned again, there's been a couple of big moves. So that's why I said here, maybe it'll be something like this and kind of get you pinned again, or if we really get follow through, maybe it does break out, or it probably is going to need NVIDIA earnings for that. But that definitely caught my attention. We were looking at that from earnings, so maybe we could make a play on it. But that is play number three. And now moving into the plays that I made today, I only made one. Oh, actually, no. I forgot. I did an MNQ. I flipped the MNQ today. We made like $200. I bought the data. It came in. I thought it was going to be hot. Remember, I was like, no way that's going to happen. And it didn't come in hot. So I said, you know what? Let me go grab me a mini NASDAQ future. I kind of top ticked it. Then it came down. I was going to buy gold. Oh, if you were there, you saw the call out. I was like, oh, I'll just get a little greedy. I set one target and then it hit there. And I was like, no, I'm going to wait. And then it rocketed off of there. But that was a good one. Got out of the MNQ. Didn't get to play the gold. And then the Netflix, I got the news early. If you guys were there on stream, you would have saw it even come up across the wire, and then Troy came in with the follow through too. It was absolutely amazing, but being early, it was kind of paid off as of late. It doesn't happen all the time when the market gets a little wicked, but I was able to snake these options on Netflix. I got the 730s for 9 cents. So even after the news, they closed up over 100%. I grabbed 2 of them. I didn't sell any. I will be writing those because they do have until next week, and then we have all that news after this breakout. So we'll see where that leads us, but that is everything moving into now the questions. We got some good ones, and honestly, this relates to some of the options and some of the ones we did recently and hopefully a potential play in the future. But they said, Josh, how do you make options free? I keep hearing you say that. So here's the best part about this. You could do this with either stocks or options. This is not exclusive to options. And like I said about a future play, you know, we have that Vanny Biotech. Go watch the other watch list videos. They got that event on Friday. But if that Vanny hits, I have a ton of shares right now, but I'm probably going to make it free. If the stock has a huge pop, I plan to use this strategy. But essentially, all you do is sell to get your initial investment back after the stock has made a move. So like I'm saying with Vanny, if that thing goes up 50%, let's say 100%, I will sell out, get all my money back that I put into it, and then hold the rest of the shares for free. With options, I actually did this yesterday with Oracle. We had that play. I bought 3 of those contracts for about $6 each. 3 contracts, $6. It was $18 in total. I sold one of them for $18. I got 13, but I thought it was 18. But bear with me for the example here. Is that the right bear too? I don't know. But either way, $18. I sold one of them back for, and I paid $18 for 3 of them. So therefore, by getting my initial investment back, I now hold these 2 contracts. I did sell them out for $60, $70. They ended up going higher, but even if I didn't and those options went to 0, I would have had my initial $18 back. My account necessarily, I shouldn't have lost, but I gave up potential profits. So, ta-da! That is making it free, and you could ask anybody around these parts of Chattadonia. It's a really effective strategy, especially if you're doing a lot of trades and some could end up running and going crazy. This is a good way to make sure you could protect yourself while keeping a hand in the cookie jar. That's what we say, baby. And shout out the Ghetto Spread, too, but that's a great question. That was number 1, and now number 2, man. I feel bad. I don't know if homie knew what he was doing when he asked this question, but he said, Josh, why is the long-term necessary in trading? You don't know, bro. You just unlocked the Josh long-term rant, man. I'm honored to give you this, man. But why is the long-term necessary in trading? Because the stock market is rigged. I truly do believe this. And as Buffett says, it is a mechanism, the stock market, to transfer wealth from the impatient to the patient. And I don't even know if Buffett said that. Maybe it's been wrongfully quoted to him, but that's just like one of the old phrases. But the point is, man, is it's super important to own stuff, and you go see the stock market and how it plays out. When I say it's rigged, I mean, I do believe it. I believe high-quality assets and the way they hold up over years in the long run, I mean, there's no history that proves against it, sadly. But even then, man, this is something I even have written here. In all seriousness, your time is valuable. And the fact of the matter, you know about the stock market right now, and that is a huge blessing. But the only way you're going to be able to capitalize on being in the stock market in 2024, again, I got into this like, what, 16, 17 years ago? It was a blessing, but if I didn't buy and own anything, I mean, yeah, I would have just known about it, but I didn't do anything. The way you capitalize on this opportunity is by becoming an owner. And becoming an owner is one of the biggest factors here. And it doesn't matter, even if you don't have money. Like, for real, you may have low income, no income. The idea is to start finding a way to own little pieces of high quality assets. The United States, this business environment, you want to own it and over the long term, because even the littlest you stack up and build, it has a lot of future potential. But even without getting too crazy, and let's talk about trading, I mean, let's be real. There's going to be some years that you trade amazing, and there's going to be some years that you don't. If you're relying solely for your investments in trading or even for income or trading, the fact of the matter is some people are going to have good years. Some people are going to have bad years. If it really was that simple, I mean, there wouldn't be everything you see. There wouldn't be all of the courses and industries and hedge funds, but sadly, it's just not going to always be there for you. But with enough time, the stock market will, baby, you know, and that's why you really do want to own. And what I mean by that is that you won't get left behind, and having a long term besides your trading. And this is the thing, like, dude, I trade and I have good years. I have bad years. Last year I did bad. Thankfully, I had money in bonds. And then thankfully, I got lucky at the end of the last year. A lot of my trades hit in that last month or two off of the pivot. I went from down to back up. And then even this year, I started getting washed again on a couple. Got some other big plays. But the fact of the matter is the trades are going to go back and forth. But, dude, the long term, I don't even know. If I go and see it, I'll show you right now. We could take a gander, but dude, beginning of the year is at 150. Today it's sitting at 183. I mean, I'm not going to get left behind, even if it's small and gradual gain. And this is like year after year after year after year. We moved this account, but if you know, we've had this 4 years, and yeah, some years will be good, some years will be bad, but before you know it, I mean, this is going to be bigger than anything, saving anything. And don't let the big amounts fool you. We've replicated this with a small account, and like this account right here, this was the OG one that we started, and this is based off of if you made minimum wage. Yeah, it took about 3-4 years, but the fact of the matter is, if you had the ability to save $200, $300 a month, that would be 10% of a $36,000 a year salary. You would, again, own assets, and over time, and some years it'll be good, some it won't, but as the market and the world does all this, you are not going to get left behind. And yeah, we have another one. I did it. Even my sister wanted to start late. We made her one. It's the same. I mean, you could just see, and this is, again, we have to restart these accounts, not restart them, but transfer them over. But they had way prettier charts where you could really see over the years. But this is why, and that's what I'm saying, trade whatever you want. And the fact of the matter is, some trades will hit, some won't. You'll do good, but like, it's like, why wouldn't you have this on the side and you want to become a owner? And I've said fact of the matter a lot, but fact of the matter is, once again, all of us in here, you could post it in the comments. We have all had a stock that we traded at some point in our life that would have changed our life if we just held. So I got to start really early, and I learned this early on, and that's why I share. That's why I scream it from the rooftops, because you either are going to understand this through experience early, or you will delay on it. But then sometimes you could burn a couple of years, but in a couple of years you could set up something really, really nice. And it is all about taking advantage of the time. And I'll just end it with this. On top of all of this, just think about it. Any really valuable asset in life, you wish you bought it 10 years ago, 20 years ago, 30, whether it's a house, a stock, even watches. Think about all the real high-quality investments out there, and you go look back, you're like, yeah, if I was a boomer, I would have bought it. Oh, I wish. Even then, there's so many things right in front of you, sadly, and sometimes it gives us weird feelings. I mean, NVIDIA and other things, but like, even then, look at the Ubers of the world. Like, this stuff was right in front of us for a long time. But even the crazier stuff, imagine you bought Apple 10 years ago, 15 years ago, a house, all these things, and this is where it's like, yeah, stuff's expensive now. You may feel like you're left behind and late, but dude, the best time to plant a tree was 20 years ago. The second best time is today. So do it, man. Trust me. I mean, this is one thing I like, for real, man. I've had good trades. I've had bad trades. Some people love me. Some people hate me. But anybody who's done the long term, like, dude, it holds up, man. And people love it, and they thank me for it. And I think you will. And this is oh, it's beautiful. So do it, man. While you trade, no one's stopping you from the trading, but don't get cheated out of not having this over the years from the moment you know about the market, baby. Okay, see, I love this one. But now, finally, bro, all these little random lessons at the end, bro. WTF, what are we talking about? You know, if you haven't been here, I've been reading from Thomas Oatley, International Political Economy. It is a book that I studied in college. There is an updated version out, and I'm doing some refreshed learning and sharing it with you guys. And I'm glad to see that it's all stayed the same, but what we are talking about is IPE, International Political Economy, or political economics, depending on what tense you want to look at it. But I think it's time that we start from the beginning. I want to explain this to you. It's going to lead into the schools of thought and everything else, but I really beg you guys to pay attention if you care about learning, and knowledge is power. You know, again, the world is crazy nowadays, and you see how everything and how hype we get about certain things, and but like, dude, even the Googling stuff is difficult nowadays. It's like, dude, knowledge, education is power, bro. So for real, I hope you pay attention. And why I say that, because you'll see in this book, man, and there is a lot of unbiased takes in it, and it's just explaining certain things and how we got there and giving you a full picture. And the fact of the matter is, sadly, if there is going to be like any politicization out of what I'm sharing with you and some of this history and applying it to an international political economy context, if you are politicizing it, you may have already been brainwashed, or it's coming from me or whoever is teaching the book. And this is something like, you know, you see these college campuses and they're like, I know the college campuses, they're radicalizing our students. It's a shame. Fake news media, you know, and like they're saying on the colleges, but dude, this book is in colleges right now and it's there. And usually like how it works, like when I stop, and I will explain, and that's why I'm saying when I read the book, take what the book says. When I stop to give you something, that is me. And if there is going to be politicization from that, it will come from me or whoever is teaching it. That's why, you know, I remember my teachers, they would read it, they'd give you it, and then they'd have their opinion, or if they structured their curriculum kind of in a left or right manner, you know what I'm saying? But the info is there, and how you take it and use the evidence to make your judgments, that's on you, and that's what I do encourage. So hopefully I try not to politicize it, but just know, if I'm interjecting, anytime that I start to go in from it and you have a text giving you kind of the full sides of it, and hopefully you could go fact check and back it up too, I mean, at that point, take the info as a whole. Anything extra, opinions, all that, that's when you start to run into the realm of things getting diluted or twisted, perverted, convoluted, all of that. So that being said, baby, I'm even going to leave you guys with a little bit of a homework assignment today. It's a little bit shorter, but I think you'll like it. Let's start with the beginning and what is the international political economy. So getting right into it, there's the little context you need to understand. We are going to move into talking about the schools of thought that try to theorize a lot of these questions that get posed. But when it comes to the international political economy, there are two main questions we look to answer. There's a couple of schools of thought here that have been around for like 100 years that try to answer it. And even nowadays, the book even says it, there is a lot of things that people are doing that doesn't necessarily fit into the traditional schools of thought. So it doesn't mean you are constrained by just this, but what you should be taking out of it is answering the two main questions. So let's get into it. Those who study the global economy through the lens of IPE, International Political Economy, are typically interested in doing more than simply describing government policies and contemporary developments in these four issue areas. Most scholars aspire to make general statements about how politics shape the policies that governments adopt in each of these issues. Moreover, most scholars want to draw more conclusions about the consequences of policies. As a result, two abstract and considerably broader questions typically shape IPE scholarship. First, how exactly does politics shape the decisions that societies make about how to use resources that are available to them? Second, what are the consequences of those decisions? Because these two overarching questions are central to what we cover in this book, it is worth taking a closer look at each of them now. How does politics shape societal decisions about how to allocate available resources? For example, how does society decide whether to use available labor and capital to produce semiconductors or clothing? Although this question might appear quite remote from the issue area just described, the connections are actually quite close. The foreign economic policies that a government adopts, its trade policies, its exchange rate policies, and its policies towards MNCs, multinational corporations, affect how the society resources are used. A decision to raise tariffs, for example, will encourage business owners to invest in workers to seek employment in the industry that is protected by the tariff. A decision to lower tariffs will encourage business owners and workers currently employed in the newly liberalized industry to seek employment in other industries. Decisions about tariffs, therefore, affect how society's resources are used. Foreign economic policies are, in turn, a product of politics, the process through which societies make collective decisions. Thus, the study of IPE is in many respects the study of how the political battle between the winners and losers of global economic exchange shapes the decisions that societies make on how to allocate the resources they have available to them. These decisions are complicated by two considerations. On the one hand, all resources are finite. As a result, choices about how to allocate resources will always be made against the backdrop of scarcity. Any choice in favor of one use, therefore, necessarily implies a choice to forego another possible use. On the other hand, in every society, groups will disagree about how available resources should be used. Some groups will want to use the available resources to produce cars and semiconductors, for example, whereas others will prefer to use the resources to produce clothing and agriculture products. Societies, consequently, will always confront competing demands for finite resources. One of the important goals of IPE as a field of study is to investigate how such competing demands are aggregated, reconciled, and transformed into foreign economic policies. The second abstract question asks, what are the consequences of the choices that societies make about resource allocation? These decisions have two very different consequences. Decisions about resource allocation have welfare consequences. That is, they determine the level of societal well-being. Some choices will be maximizing social welfare. That is, they will make society as a whole as well off as possible, giving existing resources. Other choices will cause social welfare to fall below its potential, in which case different choices about how to use resources would make society better off. Decisions about the resource allocation also have distributional consequences. That is, they influence how income is distributed between groups within countries and between the nations in the international system. So let me give my opinion now. Ready for this? I think distributional consequences are important. And I think nowadays what we kind of miss is, we do focus on groups. We look at the rich and poor, all of the different people, working class, blue collar, white collar, and, people talk about the wage gaps and all of that. But, what I was taught, there's other nations, so the consequences that we look for, yes, it is about the groups within that nation and within a country. But I think something that a lot of times goes overlooked is how it affects other people and everybody as a whole, especially in this globalized society. So there you see, that's opinion. Back to the text, baby. So welfare and distributional consequences are both evident in the American lumber tariff. Because the tariff makes it more profitable to produce lumber in the United States than it would be otherwise, some investment capital and workers who might otherwise be employed in highly efficient American industries, such as information tech or biotech, will be used in less efficient American softwood lumber industry. The tariff thus causes the United States to use many of its resources in economic activities that it does less well, and too few resources in activities that it does better. As a consequence, the United States is poorer with a high tariff on lumber than it would be without it. So let me add more opinion, because again, although I'm telling you unbiased, I like the book, there's this and that, I personally think you should question things and stuff like that. I'm like, yo, man, what do you mean the lumber homie's about to get into biotech? Like, what? So, there is, and that's okay. And that's where I'm saying I hope you use this as part of it, but they're trying to paint kind of an example. They're not trying to justify it, but like I'm saying, if you have a natural opinion, I mean, I do as well, these things come up, but hopefully that shapes your knowledge and hunger to learn more and dive deeper. So, yeah, the last part, the lumber tariff also redistributes income. Because the tariff raises the price of lumber in the U.S., it redistributes income from the consumers of lumber, such as American home builders that use lumber in buildings, and American consumers who purchase these homes, to the American lumber mills. In addition, because the tariff makes it more difficult for Canadian mills to sell in American markets, it redistributes income from Canadian producers to American producers. The tariff on Canadian lumber, like many economic policies, affects both the level of distribution of income within a society. So, even at that, my opinion, and like I'm saying, the thing you can learn is the connections. That domino effect. And that's what this is kind of helping to understand, because again, one thing doesn't just affect one. That's the thing I like about understanding these theories, is understanding the broad cause and effect relationship and how one thing affects the other. I mean, this is where rationality does get based on once you kind of understand that full picture. So that is all I have for you for the text. But now, tomorrow or whenever we get to it, we're going to run into the schools of thought that try to answer these two questions. So like I'm saying, we'll get back to gold and other stuff, but I think we need to start building a foundation here. So, those of you who have been really following along, I could definitely hook you up with this. So that being said, here's your homework. Study these, the three schools of thought: mercantilism, liberalism, and Marxism. And like I'm saying here, I want you to learn about this. And as far as whether you're going to turn into a Marxist or and liberalism is funny, you're going to learn more. It's not what you think it is, but study this chart, get a general idea of what it is. But like I'm saying, opinions are what's going to force you after that. But it's good to understand all of this. And these are the traditional schools of thought that have been applied over the last 100 years. It's not the only ones. And lately we've moved into other things, but this is the starting ground. And that, like I said, that foundation of this knowledge that a lot of the stuff we're going to do throughout here is going to be building on. So Chatadonia, I hope you like the homework. I hope you like the watch list. Let's see. Oh, we got law terms, baby. Oh, it's beautiful. That's beautiful. But that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, baby, that peace gonna configure yourself to let the glory flow through. And remember, as you are consuming, don't let yourself get consumed by the behavior, baby. But Chad, I love you. Drink that water. Stay hydrated and healthy. All that good stuff. I'll see you in the morning. Let's close out this weekend. On.